Well, it looks like the government, the U.S. government, the central banks, they've finally done it. And their mission was to convince the people that everything is absolutely fine in the economy. Now, despite storms, wildfires, quakes, high gas prices, failed Washington policies, the University of Michigan, the UMich survey, says that people are the most confident since January of 2004. Now, if we go back in time and we go back to the times where we had recessions, we can see that each time, back in 99, 2001, 2007, going into 2008, people were very confident at those times. And then what happened? The entire thing fell apart. Now, we need to remember that people believe the economy is doing well because the stock market is continually rallying. And they believe that the stock market will rally further in the next 12 months. Even though Americans are living paycheck to paycheck, their pensions are in trouble, people are losing their jobs, retail, well, they're closing a lot of stores. The GDP numbers are completely fake, phony, and false. The unemployment numbers are fake, phony, and false. They were successful in convincing the public that everything is going to be fine. And we saw this right before we had the recession of 2008, where people believed that this could never end, that real estate would continually move up, the stock market would continually move up. We would never have a downturn, and it all completely fell apart. Now, when we look at Wells Fargo, we are seeing that their mortgage applications, well, it is completely falling apart. They've had a drop of around 27% year on year in mortgage applications, and they declined by $73 billion in the third quarter. And we can also see that the automobile loan originations, they are tumbling by 47% year on year to only $4.3 billion. Now, this is the lowest since the bank started disclosing this item back in 2013. So when we look at this, we are seeing that the auto loan origination, the mortgage origination, they are all declining at the same rate. There are problems ahead here. Now, what's very interesting, the Bank of England suggests that the British consumer is about to face the biggest credit crunch since the great financial crisis. And it's not only in England, it's going to be worldwide. Now, the Bank of England is continually warning that there's a surging pace of lending to households. British lenders are planning the biggest cutback in consumer loans in nearly 10 years. And we know that the credit impulse has gone negative. We can see that in England, in the United States, well, people, they don't have the ability to take out loans. Credit cards are maxed, and we're starting to see that mortgage applications, auto loans, and the rest, well, it's all starting to freeze up. And if this does happen and credit does freeze like it did back in 2008, we're going to be in for a lot of trouble. Now, the latest survey signals the steepest contraction since the fourth quarter of 2008, when the economy was in the depths of its worst post-war recession. And we see right now that this is going to spread all over the place. It's not going to be isolated to one area. Because just like the housing market, it spread to many different areas, not just here in the United States, but to many different countries. And now we see other countries where their bubbles have blown up even larger than the United States. Well, that's going to spread back to the United States. So it's all interconnected, and all they did was push things in all different directions. And we've been watching this, we've been following this, and we know that all of this has been one big gigantic illusion. And we're seeing all these indicators, and all these indicators are showing us that there are major problems ahead of us. And they're approaching very, very quickly. Now, China and Russia, they're continually moving forward where they're doing things without the dollar. And the U.S. received a major blow to its global hegemony, and one which is sure to trigger more talks with Washington against China, against Russia. We see that China has established a payment versus payment system to clear Chinese yuan and Russian ruble transaction. Now, the aim, which we are understanding, is to reduce the risks and improve the efficiency of its foreign exchange system. The new mechanism, which is going to rival the U.S. SWIFT interbank payment system. And what does it actually do? Well, it allows for a simultaneous settlement of transactions in two different currencies. It was launched on Monday after receiving approval from China Central Bank. And we see right now that, again, they're doing everything step by step to make sure they're prepared and ready for what is coming. And that is the dollar declining. That is, the dollar is going to be doomed. And this is a major blow. Now, China is going to be buying Saudi oil in yuan. Here is another country where they're not going to be using the dollar. And we need to understand something very important. Russia just made a deal with Saudi Arabia with their oil market. They also made a deal with their military assets by supplying them the S-400 missile system. We also understand that the global oil market could follow in Saudi Arabia's footsteps. And this would spell a catastrophe for the United States dollar as the world's reserve currency. So all of this is happening all at once, and it is accelerating. More countries are looking at this saying, you know something, we can trade in yuan, we don't need to use the dollar. Venezuela's saying this, Saudi Arabia's saying this, Iran is doing this. We're going to be seeing Syria do this. Most likely Iraq is going to be doing this. We know that China and Russia are already doing this. And the rest of the Middle Eastern countries where Russia is talking peace in Libya, helping Lebanon, helping many of the other countries, they are all going to be turning towards Russia, turning towards China, and they will end up using the yuan, which means once again that the dollar is going to be sent back to the United States, because these countries, they won't need the dollar to purchase the oil. There's no reason to keep it in reserves. And if they don't need to keep it in reserves, they're going to send it back to the United States. If it comes back to the United States, we're going to have more dollars in circulation. And we've been talking about this in depth for the last couple of days. We are going to see inflation, because as there is more dollars in circulation, that means the value of the dollar decreases. We're already starting to see this happen right in front of our noses. It's not something that happens very quickly. We've been following this for quite a while. It's a very slow process. And the reason why it's very slow is because they don't want the rest of the world to wake up to really understand what's going on. Central bankers work very, very quietly, very methodically, and they make sure that whatever they're doing, it's really not important. Don't pay attention to that. Why don't you look at the stock market instead, because that's what's most important. But really, the stock market is the least important, and everything else they're doing behind the scenes, that's where the importance lies. That's where we should be looking, because they're already setting up the next system. They're already doing it. I mean, right in front of us. And we've been following it. We've been tracking it every single year. And we can see how they announced they were going to make a payment system. They made a payment system. They announced that they were going to trade between the two countries, China and Russia, not using the dollar, and they were going to have oil trade using their own currencies. They went ahead and they did it. We saw that China was making bilateral trade agreements with many, many different countries. And here we are today. They've done it. They said they were going to start the Belt and Road. Here we are. They've done it. They said they were going to include the yuan within the basket of SDRs. Well, here we are today. They've done it. They're going to be using the yuan so other countries can use it to pay for oil. Here we are today. Countries are already signing on. The writing is on the wall. They've pretty much done everything that we've been talking about. And yes, it was a slow process. Yes, it took some time. Yes, they duplicated everything that we have in the West over in the East, like their payment system. It's all being done right now because they understand that the system is going to fall apart. The central bankers are ready to move everything away from the United States because they don't care what country they go to. They have no allegiance whatsoever. Makes no difference to them as long as they can control the creation of currency. And this is what we see happening right now. This has been planned for quite a while. It's not just something that they woke up yesterday and said, hey, you know something? Let's create all the markets. Let's create the payment system. Let's create all of this today. No, they've been doing it all along. And if you've been paying attention, you would have seen this. If you've been listening to what we've been all talking about, you would have seen this. And again, a lot of people are not awake. A lot of people are still sleeping. They don't understand what is happening. And we can see that this is happening right now because they planned it way before. They took the steps necessary, and here we are today. A lot of people think it's just happening. Like, oh, they just did it today. No, they didn't. Same thing with everything else that they've been doing. They've been planning all of this for a very long time. They're very patient, and they make sure that they plan it, and if this plan doesn't go, well, they readjust and they create a new plan. They always have plan A, B, C. They're never stuck. And the central bankers have been controlling the world for quite a while. And we can see that we're coming up to this point where the system is about to change. It's going to be painful. We're going to go through a transition. This is why you need to be ready and prepared. Listen, everyone, thanks a lot for listening. Be well, be safe, and especially be prepared.